Nancy Pelosi just purchased $5 million worth of shares in an AI stock, one that we are going to uncover in today's episode. But it isn't just her. We're now seeing in the recent period members of Congress adding millions of dollars into 5 other specific AI companies that we are going to get into the episode today. And remember, members of the Congress always in the spotlight in these episodes. They do typically outperform, and quite considerably. And what a life it must be to be a member of Congress, because even if you are in fact caught insider trading, the penalty is only $200, and on top of that, we can see that no member of Congress has ever been prosecuted. Now, the spotlight is typically on the likes of Nancy Pelosi because she does massively outperform the S&P. We even have some copycat investors who just follow her trades and are up around 800%. And there's even now an ETF, ticker symbol NANC, which mimics the exact buys and sells of not just Pelosi, but also some of her very successful colleagues. And we can see since inception, it has also outperformed the S&P. Something we've also highlighted before, Nancy Pelosi's own portfolio in the last 10 years is up 714%, with the S&P up 232. And just over the last few weeks, the calls to ban members of Congress are getting louder and louder, and this is ultimately due to the amount of money that these members are raking in. You could argue perhaps it is just, as noted here, another lucky year. And whilst the figures aren't in fact disclosed, we can see it is estimated quite a large range, but that Nancy Pelosi and her husband have raked in around $8 to $43 million in just the last 12 months. And that is a great track record for someone who says they have no prior knowledge or any subsequent involvement in any transactions. Actually says she owns none of the stocks and it is all down to her husband. And this is some incredible piece of information here as well. It was noted by the stock market watchdog that Nancy Pelosi raked in just under $5 million in a single day of trading, which is why again her trades are under the spotlight. And whilst the trade took place on the 20th of June, it was only disclosed a few days ago, so that is why there is a bit of a lag in terms of the timing. But essentially, in terms of the purchase, it is Broadcom, where she exercised the call option, giving her ownership of 20,000 shares right before the options expired. And these are now worth around $5 million, and she is up around 70% from this initial option. And whilst it was just disclosed on the 9th of July, this trade was made on the 20th of June, and even since then she is up around 10%, whilst the S&P is up just under 5%, really highlighting that the trades she makes are definitely one not to ignore. And what makes this even more fascinating, if you did watch our episode just a few days ago, members of Congress were in fact dumping quite heavily Broadcom, so very interesting to see that Nancy Pelosi has been doing the opposite. She now owns around $5 million worth of the stock, whilst members of Congress have in fact been dumping. Now, a brief analysis of the company before looking at the other 5 members of Congress have been buying millions. But Broadcom itself is up 61% in the last 12 months, up 18% year to date, and over the last 10 years, up nearly 2,000%, massively outperforming the S&P, and it does in fact trade near its all-time high at $281. Nancy Pelosi now holds $5 million worth. Wall Street themselves still believe this is a strong buy at 4.63, whilst also Seeking Alpha also giving it another buy rating. But we do have to make you aware, just because she is buying doesn't mean you should follow blindly. The forward P sits at 38, which is well above the 5-year of 18, meaning a severely overvalued signal. And that is also confirmed on dividend yield theory. It's offering you 0.9% when the 5-year average sits at 2.8. Both of these in combination screaming overvalued. And that is something we also note when we look at this model here. The blue tunnel telling us the fair price. Over the last year, this one has been trading in severe overvaluation. The disparity though is the highest between where the company sits and the upper end right now, and in fact if we were to zoom out to the last 5 years, we can see pretty much from mid 2023 this has been trading at a massive premium, and it's very rare. Only one point in the last 5, you'd have to go to the back end of 2022 where this was trading at an undervalued level. But institutions also love this with their 76% ownership. Yes, they've sold $38 billion worth, but they've been buying a lot more at $217 billion, and they've also been buying a lot more in Q2, $1.4 billion in just the last few months, while selling $226. So yes, members of Congress have been dumping. Nancy Pelosi though, she now owns around $5 million. Institutions also adding. We'll also just highlight that our own intrinsic value puts this company at $258, derived from the DCF model. Now we have the free cash flow year on year, where the average sits at 33. We've gone 20% moving forwards. You can see low, medium and high, 15, 20, 25. Now these numbers are subjective. As always, you can grab a copy of this model by clicking on the pinned comment below, running your own numbers, whether it's for Avgo or any others. But we have the growth rate, we have the discount rate. This in turn gives us the present value of the future free cash flow and terminal value, where we add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding to get 258. Now this highlights downside of 6%. For those that believe that is way too high, well at 15%, intrinsically 179, downside of 35%. And for those that believe it should actually be a lot higher, a lot more bullish in the space, $367, indicating 34% upside. Now typically on the channel we do take through the medium rate, which is here 20% for Broadcom, and we're not done because we apply a margin of safety. But what this is highlighting right now, no margin of safety for Broadcom. It is trading at a bit of a premium, but if you did want to see at a 10% MOS, a buy at $232, at 20, 206, and at 25, 194. Wall Street themselves, even with their strong buy rating, see minimal upside, 8%, $296 into 2026. Let us know your thoughts. Are you more siding with Nancy Pelosi or with members of Congress? Do you see this as a buy, hold, or avoid? Now, before we continue, we just want to let you know we have released our latest free weekly article. We draw on every single Monday morning to your inbox, where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll also be able to gain access to severely undervalued stocks for the month of July. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that you can grab a recently released copy of stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. Then we move on to the stocks that members of Congress have been buying in the AI space. We have TSM up 25% over the last year, up 17 year to date. Over the last 10, outperformance, not as strong as Broadcom, but still 900%, much higher than the S&P. Also trading near their 52-week and all-time high at $238, where we have a double strong buy from Wall Street and Quant and a buy from Seeking Alpha. This is a very alarming signal that every single analyst believes that this is one for the portfolio. However, we were covering this towards their 52-week lows, where we were saying this was a screaming buy. Right now, though, we don't believe that to be the case. Not necessarily a sell, but we do notice the forward P 24 above the 5-year at 21.9, an overvaluation signal. The same on the yield, 1.4, below the average of 1.7, and we also get an overvaluation signal, although marginally it is only slightly outside of the blue tunnel. We did see it not that long ago, Liberation Day, in a severely undervalued space. And zooming out to the last 5 years, we do actually see this sometimes in an undervalued level as well as overvaluation. Right now though, just slightly outside of the top. And whilst institutions only have 17% ownership and have been selling 18 billion shares, we can see they've been buying more in the last year at 25 billion, but also more in Q2. 178 million buys versus 48 million sells, still very bullish overall. And our intrinsic value of $244, the average of the three, will give you a margin of safety, not at 10% just yet, that would be $219. Right now we see 5%, maybe not enough if you are interested in opening a position. Wall Street themselves, $245 into the next year, upside of 7%. Now at 10%, for those interested, 219, at 20, 195, and at 25, 183. But let us know your thoughts. Is TSM one worth considering, or a hold, or in fact maybe an avoid? The next stock members of Congress have been adding is Marvel Technology, pretty much flat over the last 12 months. Year to date down 34%, but over the last 10 years continuing the trend of companies that have been outperforming the S&P, up 466%. Unlike the previous two that were at the upper end of the 52-week range, they're trading towards the lower end with a double buy from Seeking Alpha in Wall Street. Wall Street 4.48, very near the 4.5 to flip this into the strong buy. And we actually get an undervaluation signal, forward P of 24.5, well below the 5-year average of 35.1. We would call this severely undervalued. And this is also consistent when we take a look here. In fact, since Liberation Day, this one has just stayed in an undervalued space. What is great to see as well, whilst in fact the share price has been decreasing, the intrinsic, the fair price so to speak, has been increasing over time. That is a very, very great sign that this could be an underappreciated, undervalued quality company. And actually, if we look over the last 5 years, this one, similar to others today, has been trading in both an overvalued and undervalued space over the period. Now, institutions with their 84% ownership were selling 10 billion in the last year, buying more at 13 billion, continuing that trend in Q2 with 143 million buys versus 33 million sells. And our intrinsic value of $85 derived from the DCF model has been used, derived by a 17.5% growth rate moving forwards. You can see the other rates that would give those prices, but what we'll actually show you for your information, if you were to use 15%, it isn't that far off the price right now, a few dollars shy. So as of today, given the market value already baked into the numbers is 15% growth to the future free cash flows, you need to see this higher for this really to give any kind of undervalued level. But as we do go through the middle rate at 17.5, you are actually getting a margin of safety of 10% up to $76. At 15, not that far off. So first one with a bit of an MOS. Marvel Tech, 15% MOS. Wall Street themselves, $91 into the next year, 25% upside. Maybe this is one to buy or consider on the watch list. Do let us know. The next stock they've been adding is ASML, which is down 25% over the last year. Year to date positive, up 16. Over the last 10 years, outperformer, up 700%. Trading around the mid to lower end of the 52-week range, still quite some way from 52-week highs of $1,100 with another double buy from Seeking Alpha and Wall Street. We also get an undervalued signal with the forward P below 30, the average sitting around the 34 mark, although the yield on offer isn't too dissimilar from the 5-year average. And we can also see undervaluation, although very slightly. It could be a few days or a few weeks where this does climb back into a reasonable level, although over the last year, pretty much for the large part, trading at a bit of an undervaluation. But over the last 5 years, there has been quite a lengthy period where this company has been trading at a severely overvalued price, and institutions with their 26% ownership have been selling and buying the same pretty much in the last year. But in the most recent quarter, in just the last few months, they've been ramping up the buys, 45 million versus 6 million selling. Now our intrinsic price has stayed the same for quite some time at $1,049. That is derived using a growth rate of 14%. But if we were to use 12, you're still getting upside, $913, 14%. A lot more bullish at the 16% level, 50%. 1,204. Now using the middle rate of 14%, the MOS available right now as we keep on going is more than even 15%. We're talking 20 at 840 and 25, not quite there yet. So as of today, ASML, based on a growth rate of 14% moving forwards, we see 20 to 25. Wall Street themselves seeing this at $900 into 2026, 12% upside. And we'll also show you, for those that believe perhaps we should use a more conservative rate, that you are still getting a margin of safety, 10% at 822, at 15, not quite there yet, sitting somewhere 10 to 15. Let us know though your views on ASML. Maybe an interesting one, but members of Congress have been loading up on Cisco Systems, up 45% in the last year, 15% year to date. Over the last 10 years, outperforming marginally the S&P, up 141, trading near their 52-week and all-time highs of $70 with another double buy from Seeking Alpha and Wall Street, although we get a double severe overvaluation signal, 17.2 versus 14, and the yield on offer is lower than the historical 3.1, and maybe no surprise then that we do get that overvaluation signal here, but over the last year there were a few points where you could have got this in a reasonable level, and the same to be said over the last 5 years. This is one though for the large part hasn't been too far off the reasonable valuation over the periods, and institutions with their 73% ownership have been selling 13 billion, but they bought a lot more, nearly double at 22 billion, and just check this out in Q2, 1 billion buys versus 59 million selling. They, like members of Congress, are very, very bullish. Now, our intrinsic value is $67, the average of the three, which again, you can always grab a copy by clicking on the pinned comment below, whether it's Cisco or any others, highlights that right now we see this pretty much trading at its fair value. Wall Street themselves, 4% upside, very limited. They see this at $71 into the next year. Again, for those that want to know, 10% a buy at $60, at 20, 53, and at 25, bang on 50. Cisco, though, in your opinion, one to follow, members of Congress, or perhaps an hold or complete avoid. We then move on to advanced micro devices. Yes, members of Congress have been loading up, down 20% in the last year. Year to date is up 21%. Over the last 10 years, up 8,000, in fact more than that, massive outperformance, trading in the mid to upper end of the 52-week range, still a little bit of way to go to the 52-week high at $186, and like we have noted, a double buy from Seeking Alpha and Wall Street, both not far the 4.5 for a strong buy rating, and the current forward P does sit at 38. Now, they do get a D+ on the valuation grading, as the sector does trade a lot lower at 24, so you are paying a 58% premium right now for AMD. Against their own 5-year average though, we can see it isn't too far off, around 6% of a discount, but regardless of whatever valuation metric you look at, one thing is for certain, this company does trade at quite a large premium to the overall sector, and a bit of a discount to their overall 5-year average. Now, institutions do hold 71% ownership, where they were selling and buying around 20 to 22 billion, yet we have noticed in the most recent quarter, institutions like members of Congress have been loading up 1.3 billion buys versus 445 million selling. And we also want to show you something very funny that we believe backs up when we keep saying don't listen to analysts, take them with a pinch of salt. Yes, it is good to see what their price targets are, but don't use this as a buy or sell decision. We in fact noticed at the beginning of this year, we're only talking a few months ago, HSBC gave this company a double downgrade, and they said ultimately the company will fall due to strong AI competition. They're referencing Nvidia here, and they had their price target down to $110. And just days ago, we now see that they've upgraded AMD stock to a buy on AI revenue potential, and they've taken them from $100 to now having a price target of $200. Now, our intrinsic price, again staying firm at $137, is derived using a growth rate of 25%. Now, you can see downside of 6. It isn't too far off, just a little bit, so baked into the numbers now is around a 25-26% growth rate. If you believe it to be lower, then actually looking overvalued, $98 intrinsic price, and at 30%, that is where we see upside of 30% as well, if that is what you believe. Now, taking through the middle rate of 25%, it does highlight we see this near its intrinsic value, just a little bit of a premium as of today. 10% MOS, a buy at 123, at 20, 110, and at 25, $103. Now, yes, HSBC have gone from 110 at the beginning of the year to now sitting at 200, but on average, analysts do see this $140 into 2026 with downside of 4%. Give us your thoughts though on AMD as well as the others that both Nancy Pelosi and members of Congress have been adding. Are any of these what you would say are a buy or maybe on the watch list, or in fact a complete avoid? Don't forget as always to sign up to the free weekly newsletter, grab those spreadsheets, come and join us at Patreon where we cover our buys and sells, and as always, have a great day. We'll see you all on the next one.